Don't call it a comeback. Or should we? I don't know. Let's talk about Jonathan Corpina about the markets and all the factors playing in today's game. Hey, Jonathan, nice to have you on Tuesday.
Thanks for having me on this almost snowy day.
Oh my gosh, it was treacherous getting in. Not treacherous for the markets though. Taking a look at the S&P, I guess you could say we've made a V-shaped correction. We keep testing that 61.8% Fibonacci. Did we rally too soon?
Listen, I think we went down too soon, too fast, and I think we're bouncing back up too soon, too fast. Clearly, our market is driven today off headlines coming out of Washington and the progress that we are going to avert a government shutdown in a very short period of time. Who knows what that does next month or next quarter, but looking at this current chapter right now, it looks like we're averting that, and the markets are reacting exactly positively from that, as we would have expected. But the real factors that are there is this a temporary thing? What does the agreement actually mean? Does everybody get what they want? It seems like in agreements like this, nobody gets what they want, and they're both going to come out saying, we got the short end of the stick. So I think this might be very short-lived. Yes, earnings season has helped us all along. We've had some decent economic data that's out there. No real significant or new geopolitical turmoil, so that's kind of quieted down for the time being. So as for now, let's enjoy the green that we have on the screen.
Exactly. And, like you said, the footnotes there, is it just the word that we're averting the shutdown? Is that what's giving us faith today? Are there any other footnotes that are investor-friendly that you've pondered?
Not many that are investor-friendly. I think the whole government shutdown, clearly does have its ripple effects. But, it's more of the sentiment. It's our economic sentiment, our political sentiment, and who's going to flex their muscles and say we won or we lost, and is there a wall or is there not, and how's it getting funded, and what does that mean to the Main Street Americans. So I think we're still waiting for some of that to come out.
Sure. And speaking about wheeling and dealing, you reminded us last week we would be crazy to think that we're going to get a US-China resolution ASAP. Now, in the short term, though, is there any, again, investor-friendly factors that can happen, like maybe avoiding no tariffs at all before the March 1st deadline?
Right, buy all your electronics as fast as possible, which I don't think is the smart thing to do at this point. But I think you just have to go back to your core and back to your roots. What companies are out there? Assume that all companies are going to get affected somehow. Put that aside. What companies are out there? What household names that you're comfortable with, that you feel have a strong potential for growth? We've seen growth over time. There's definitely a handful of companies that are out there, and some of the sectors, like I think financials are ones that have been back and forth over the turmoil and the volatility that we see in the market. But I think in the long run, coupling that with interest rates and hikes and how the Fed is working with the financial institutions, I think financials are clearly one that's a sector we should look at. And as we've spoken about, high dividend stocks. Considered, I guess, today's safe haven as opposed to gold. The high dividend stocks are ones that you can clearly, count on in a short period of time if you're not really sure where that money should go. And usually those high dividend stocks are ones that are very familiar household names.
Thanks for the tidbit, Jonathan. Hey, speaking about gold, the bulls and bears are really fighting between gold and the U.S. dollar. There's a lot of resilience, I guess you could say, gold is showing against a stronger U.S. dollar. So what are your expectations between the outcome of these two forces?
There's so much uncertainty that's out there that can clearly affect the U.S. dollar and can affect gold. And, we get tired of talking about the same things. But once again, it's investor sentiment. It's faith in the U.S. dollar. It's tariffs. It's geopolitical relations. All these different things are pushing and pulling on our U.S. currency and gold. We're going to continue to see that for some time.
And we sure did cover all those factors today. Thank you so much, Jonathan.
Great. Thank you very much. Get home safely.
Thank you. You too. Thanks, guys.